there's just a lot of things happening in these markets under the surface. I do think that it probably leads to higher gold and silver prices. I do think it leads to the dollar being taken down another notch in terms of its prominence. And, we'll just see what happens.
Please join us for our next live stream
Sunday, March 27th
at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be
Sunday, March 27th,
9 p.m. Eastern. See you then.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira. Stefan Gleason, president of Money Metals Exchange and the director of the Sound Money Defense League, joins us today. Stefan is also a polished business leader, political strategist, investor, and grassroots activist. Stefan has frequently appeared on national television shows and networks such as CNN, CNBC, Fox News, and the Christian Broadcasting Network, and C-SPAN's Washington Journal. And we're delighted to have him join us here today as a first-time guest. It's time to saddle up and silver up for Stefan Gleason. Stefan, welcome to SBTV. How are you doing?
Great, Patrick. Good to be on your show.
Glad you could be here. Stefan, you are the president of Money Metals Exchange. Can you tell us a little bit about Money Metals Exchange and how you were placed on that path of precious metals?
Well, Money Metals Exchange is one of the largest U.S.-based precious metals dealers. We're based in Idaho, near the Boise metro area. We focus on, the entire country. So Money Metals Exchange is a dealer of bullion, coins, bars, and rounds. We also are a depository. We have one of the largest private depositories called Money Metals Depository. So we store precious metals for our customers. We also have a monthly savings plan. We have a loan program where you can borrow against your gold and silver stored in our depository with a line of credit. We do a lot of content, a lot of educational type activity to help investors learn more about the markets, especially the precious metals market, things that impact that. And then in the last 5 years or so, we've really made a big push on the public policy front to promote sound money policies in the United States, primarily to try to remove taxes from precious metals and do other things to encourage their utility and remove some of the impediments to gold and silver ownership. So the reason I got into precious metals was originally as an investor about 15 to 20 years ago. I was involved in public policy. I worked in Washington, D.C. for 15 years promoting free market public policies. And that's kind of what brought me to precious metals. And it was sort of a study of the Federal Reserve System and how we have central planning through monetary policy, basically, socialism run through the monetary policy to try to, mess with asset prices and affect investor behavior and affect consumer behavior through central planning by a small select group of people. And that brought me to sort of understand and learn more about the monetary system as it stood today, and also what it originally was when our country was founded, when it was based on hard money and gold and silver as the standard for currency. And so that kind of got me interested as an investor in precious metals. And then later, I moved out of public policy and formed Money Metals Exchange in 2010 and kind of focused on the bullion side of the market because I was really not excited about what I was seeing with regard to rare coins, and a lot of the prevailing sellers then and even today are doing this thing where they're pushing people into supposed rarities and proof coins that have huge markups and taking advantage of people with high pressure sales tactics. And I know that's something, you guys are, focused on bullion as well for the same reasons, I think. But, there's a lot of people who are being sold on these supposed rarities. And unfortunately, while, people are discovering precious metals as an important tool, some people are being hijacked at the last moment and put into these things that really are not good investments unless you really know what you're doing. So we focus on the bullion market for that reason, and also on educating people about that problem, among other things.
Yeah, I completely agree with that. You know what I see here sometimes, or a lot of times, is a bullion dealer will sell, let's say, a coin that's only 2 years old, and it's not even a collectible, just straight up bullion.
Yeah.
And they'll mark the price up as if it's some type of a collectible. And I'm like, you got to know this coin came from a sellback and you're selling it at an even higher rate. I
Yeah.
mean, so I can totally understand what you're saying. And I understand you're also the director of the Sound Money Defense League. Can you tell us a bit about this organization?
Sure. Yeah, so it's principally supported by Money Metals Exchange as a public policy project, but we have other support and really focus on the state and federal legislation in the United States that has some aspect of precious metals, contained in it. And, the biggest problem we're seeing and the most practical impediment to remonetizing gold and silver and freeing gold and silver so that it can be function more as a free market currency is the taxation. The taxation both on buying it and selling it in the United States. Fortunately, on the sales tax side, which would be the tax on buying it, we've made a lot of progress building on laws that already existed to the extent now that there are 41 states out of 50 that exempt precious metals from the sales tax either fully or in part when people buy gold, silver, platinum, and palladium. And there's been an increase in those laws in the last few years. We've passed about 4 or 5 in the last 5 years. And so there's only 9 states left that have a 100% sales tax on any kind of precious metals purchase. So that's really the sort of step one of our project is to knock down these unjust sales tax laws and get gold and silver carved out, because the whole notion of sales tax is, hey, this is a tax on a good that's being consumed. The final consumer pays it. It's if you buy a pair of jeans or some other consumable good, you pay this tax. And I'm not trying to say that that's justified either, but the whole idea of applying that concept to gold and silver is ridiculous because these are not consumed. They're held for resale, like any other investment or even a money. And there's no sales tax on buying stocks, bonds, real estate. There shouldn't be a sales tax on buying gold and silver. So fortunately, that public policy has been pretty well accepted in most states, and we're making a lot of progress there. So right now we have bills in the 9 remaining states that have sales tax. We have bills in 5 of them to potentially remove sales tax. Mississippi, Hawaii, New Jersey, Kentucky, and Tennessee are the 5 states. 2 of those bills have passed through one of the chambers, and we're close to getting it through the other, or at least working hard to get it done here in the next few weeks. So we're hopeful that we're going to pick up maybe 1, or if we're really fortunate, 2 of these exemptions this year and bring up the number from 41 to 42 or 43. So the Sound Money Defense League is focused on looking at all the policies that affect precious metals at the state and federal level, and then working to improve the public policy environment for gold and silver. And one thing that we do actually as part of this project is we have something called the Sound Money Index, where we literally are ranking the laws of all 50 states on about 12 categories that impact precious metals. And about half of the scoring is based on the taxation situation. Part of that's sales tax, part of that's income tax. But it also gets into topics like whether a state has affirmed that gold and silver is money in their state law, which frankly, the U.S. Constitution already says. Article 1, Section 10 says that states actually must only use gold and silver coin as payment when they pay debts, which is kind of fallen by the wayside. And we can talk about why that happened. But we also look at whether a state has a state charter depository, or whether they have gold or silver in their pension funds or in their state reserves. There's 2 states right now that have bills that would permit the state treasurer to hold gold as a reserve asset. There's one in Idaho that's already passed the House, but there's a very stubborn Senate chairman who yet has not agreed to hold a hearing on it. And then there's also a bill in Oklahoma. But there are states that have done this already. Ohio did this. Texas has done this. And, in an environment where you have inflation at 7.5%, 8%, 9%, and you have states that are sitting on huge piles of low interest debt paper, paying 1% or less. For example, Idaho and Oklahoma, they each have about $10 billion in idle monies or reserve funds, taxpayer funds that are sitting there waiting to be spent, or maybe it's part of the rainy day fund, and it's sitting there in debt paper with counterparty risk, with a negative real return of 6 to 8% because of inflation, and they don't have any gold. And then you have war coming on, and the impetus to own gold in this environment as a state, as a person, could not be higher. And unfortunately, there really hasn't been a ton of that going on here in the U.S., at least on the institutional side with states, and hopefully that will change. So those are the kinds of policies we're working on. There's a few others, but that's what we're doing at the state level. At the federal level, we have Congressman Mooney has a couple bills. One would be to audit the gold in the U.S. Treasury, which hasn't really been done since the 1950s. And that would include an audit of any encumbrances or leasing or swapping that's been done with the gold, which is at least as important as actually verifying that the bars are there, is who owns them and have they been pledged or used. So that's an important bill. And then the other bill, it would be one that removes the federal income tax, which when you sell gold and silver in the United States, you pay a discriminatorily high capital gains tax rate of 28%. And I say discriminatorily high because other assets like stocks and bonds or real estate, you only pay 15%. So there's lots of work to do. I would say that the federal level, the problem is much more entrenched and more difficult to address. At the state level, we've been finding that we're able to move the ball with some effort, but it's very possible, and we've been making progress there.
If you're enjoying this interview with Stefan Gleason and I, please consider subscribing to our YouTube channel and giving us a thumbs up to let the algos know you want more content like this. And if you want to learn more about systemic wealth protection, please do visit us at www.silverbullion.com.sg. Yeah, I think one of those 9 states you mentioned is Hawaii, my home state. So I hope at some point they're going to show some aloha to precious metals.
Yeah, I would on Hawaii. I mean, we passed that through the Hawaii House last week. And so it's pending and waiting. We have actually some reason to believe that could be one of the states that will next pass it even this year. So I'm hopeful. And you would think that maybe being a heavily Democrat-run state, that it might be a little less of a priority, but we found a tremendous amount of support in Hawaii so far. So we're optimistic about Hawaii, which some in the industry said that would never happen. It hasn't happened yet, but it's actually quite feasible.
Yeah, we're kind of laid back there. But I understand that more states are waking up to sound money as a way to hedge against inflation, as you mentioned.
Well, very few are waking up, but there are some. I mentioned Ohio. So Ohio has the Police and Firefighter Pension Fund of Ohio had put 5% of its assets into gold in 2020. Texas had about 3%. I understand they recently sold it, which is kind of silly, but I haven't verified that directly, but the teacher pension fund in Texas owned about $1 billion worth of gold. But one of the problems is that you have these Wall Street money managers that are kind of running state treasuries, people from, either Wall Street or Harvard educated, smart people, supposedly. And, there's a lot of hostility among that class. I can tell you in Wyoming, we had a bill last year in Wyoming, and actually second time we had it there. And there's a guy running the state treasurer's office. It's not the state treasurer. The state treasurer there is pro sound money. But there's a bureaucrat there who came from Wall Street, who's a very sneaky guy, and he even lied to the legislature about the costs deliberately, and we totally caught him and brought it out to the committee that he came up with phony numbers on the cost of holding gold. He talked about it being extremely expensive and transaction costs, and he was talking about having to insure it twice, and he basically created the idea that this would be very costly. And the bottom line is he just didn't want to do it. He wants it to be in paper-backed investments, run by Wall Street money managers and their commissions. And I think part of the problem in the financial world that has led to hesitancy in adopting gold as an investment recommendation is that a lot of these folks haven't figured out how to get paid on buying and selling gold because it's just it's a physical thing, and there's storage fees and there's very small spreads, but you don't make these big commissions on selling gold like you do in selling a big bond portfolio.
Yeah, that's a great point. Stefan, the need for sound money could not be more important at this point in history, and many of us out here do believe that the dollar is dying, and we know this because the world, it seems, it's like it's simply had enough of being tied to the U.S. dollar, and they want out of it. Was going off the gold standard perhaps the biggest reason why we are going to see in our lifetime the demise of the U.S. dollar?
Yeah, I think we're seeing the early stages, or I should maybe not even the early stages, but we're seeing steps even in the last few weeks that are leading to a decline and demise of the U.S. dollar, at least in terms of being the world's reserve currency. I mean, going off the gold standard, of course, that was there's a long story there, but the Bretton Woods Agreement was the idea that, hey, Europe, you have these devastated economies. You need a stable currency. You need to rebuild the assets. A lot of the gold was in the U.S. already because it had escaped Europe and was stored in the U.S. during World War II. And so we said, hey, use the dollar. It's as good as gold. You can redeem it, show up to the Federal Reserve. We're making private ownership of it illegal, but central banks can hold it. And if you want your gold, you can show up at the New York Fed, and we'll give it to you, and you can take it back to your country. In the late 60s, we were, getting really out of control in terms of the printing of money, the Great Society, the Vietnam War, the deficits. And some of these countries saw what we were doing and saw that we were devaluing our currency, and they decided to start taking us up on the offer of getting the gold and taking it back to their countries. So France and Germany and others were showing up at the New York Fed and taking gold back to their countries. And gold was streaming out of the Treasury. And so that's when Nixon defaulted on that treaty, the Bretton Woods Agreement. And basically, at that point, though, we have everybody sort of wired into the dollar-based monetary system. The SWIFT system was developed. International payments and trade was all being settled through the dollar, which originally had that gold backing, and then no longer had it. But you can see the way that we've abused that. So now that we have everybody using the Federal Reserve note, we're able to export our inflation to everyone in the world by devaluing the currency unit and then socializing those losses across the entire world that's holding our currency. And we have the SWIFT system to sort of corral people into using the Federal Reserve note as a payment mechanism. And because we built this apparatus, and now we're seeing the way that we're willing to use that by kicking out Russia, doing other things. We already did that to Iran. But that could hasten the decline of gold, or I'm sorry, the decline of the Federal Reserve note as the reserve currency of the world. Because, for one, we're not even letting large countries use it anymore. And they have already been making preparations to deal with this because they've seen this kind of thing coming. We did it, 5 or 10 years ago to Russia when they went into Crimea. So I think that this could backfire. What if Russia said, we have natural gas, we want you to pay us in gold. If Europe wants natural gas, you have to tender gold to get our natural gas. That's very conceivable. Russia is already the number 2 gold producer. They've been rapidly increasing their gold production. China's number 1 in the world. I think Russia produces about 10% of newly mined gold. China is like 13%. So these countries have been increasing their gold production, increasing their gold reserves, and that's given them greater autonomy to deal with situations like this. And I'm just not so sure we want to know where this leads. And the more heavy-handed that we have been with the Federal Reserve note, the more that we have created an incentive for people to get away from it. And I think that that's just accelerating as countries see the way we're willing to use the Federal Reserve note as a control mechanism. So, without getting into the right or wrong of what's happening in Ukraine, there are serious monetary consequences to what's happening here. And if I were another country, I would be looking for alternatives and working on developing them. And I know many countries have been doing so.
Right. With this whole weaponization of the SWIFT system, sometimes even the dollar, I think the U.S. is getting pretty close, perhaps, to losing some of its traditional allies.
Yeah, I mean we're putting a lot of pressure on Europe, and I'm not a geopolitical expert, so I want to just point that out. I mean, but I do know that the just in the gold market, I mean, one thing that's happened is Russian gold refineries and silver refineries have been kicked out of the LBMA system. So there's a shortage of gold right now, there's a developing shortage in this scenario because prices are going up. People, there's more demand for it, both at the retail level and at the institutional level. And then we just wholesale just eliminate major gold producers and refineries from being able to contribute good delivery bars into the system. Premiums have risen substantially, not just at the retail level, but even in New York at the commercial bar level. There's a big premium now on spot gold in New York over London, and that represents demand. So that's causing disruptions. There's potentially less gold and silver coming into the system from the east, from Russia, obviously not even being allowed in. By the way, they're not kicking out the Russian bars that are already there. Those are fine. It's just the new ones, we're not going to allow. So it's good delivery if it's already been delivered, but new delivery is not. There's just a lot of things happening in these markets under the surface that I just honestly have no idea how it will play out. But I do think that it probably leads to higher gold and silver prices. I do think it leads to the dollar being taken down another notch in terms of its, prominence. And, we'll just see what happens.
Stefan, in being straight, are politicians simply naive? Are they stubborn, or are they sinister? And I'm thinking of the bureaucrats on Wall Street that you just mentioned. When it comes to knowing the history and the dangers of continuing to build a debt of unbacked, debased money.
Well, I would say most politicians are just naive on the sound money issue, but that isn't necessarily to say that they haven't taken a view that has been promoted towards them through the anti-gold propaganda that you've seen coming from the financial world and banking system over the many decades. So there's definitely a sort of inherent bias, but it's not necessarily an informed one. It's just, hey, this is risky. This is wingnutty. So, I would say that in dealing with politicians, what I've found is that very, very rarely do politicians, want to promote whatever other people's views or objectives are. They want to promote their own. And in the public policy process, you have to basically show them through not really necessarily education, although it's helpful to educate and get people to agree, but really through grassroots power. Because politicians, the one thing they do care about is getting reelected. And the one thing that matters to getting reelected is what their constituents, feel about them and whether they agree with them. So we've found that, especially on this issue, because it's a little bit more, it's not necessarily controversial. It's not a costly thing to deal with most of the policy recommendations that we're asking to be done. But we have to get people's attention, and they are not just going to do it because they think it's right or because they agree with it. There are some that will, but most of them won't. So we found that the grassroots side of the battle is really the most important one, because if you've got especially at the state level where you're a state representative or state senator, and you're not necessarily used to hearing from a lot of constituents, because there just aren't that many groups that are mobilizing grassroots and pointing them to, different representatives' offices at the state level. That happens more at the federal level. At the state level, it's unusual unless it's just a huge issue, it's unusual for a state representative or senator to be hearing from dozens or hundreds of constituents on a particular issue. And so when they do, it gets their attention. And I can tell you that in example, last year we passed a sales tax exemption in Arkansas. And we would not have passed that bill if it were not for Money Metals customers, other people in the grassroots that were mobilized through our efforts through the Sound Money Defense League to contact the members of the legislature and urge them to take action. We actually had the chairman of the committee. He wasn't holding a hearing. It didn't look like he was going to hold a hearing. And we were helping to generate very large amount of grassroots contact into his office and the office of other members of the committee. And he contacted us. He was very irritated, even, kind of trying to throw his weight around to say, hey, you don't, you don't need to do this. You might get a hearing. Don't do this. So we took basically when they tell you to not do something, you double the effort, you double down. And so we just increased the pressure. And within a few days, he had the hearing. It passed out, and then it went on from there. And ultimately, the bill passed. So I guess my point is that in dealing with politicians, they understand, their election being threatened. That's one of the things that they really do understand. It's one of the things they really do care about. And so trying to educate them is not necessarily where you should focus your efforts. I'm not against education, but educating their constituents, it takes more effort, it may take more resources, but getting people to focus their attention to take a small action to push or promote an issue forward by contacting their representative actually makes a really big difference. And so I guess that would be the lesson, I think, is that, you don't have to just, scream into the wind. If you can focus your effort on the politician at the right time and ask them to do something that may not be that big of a deal, co-sponsor this bill, vote for this bill. That's what we're trying to do with the Sound Money Project. We're trying to get these bills teed up, help get them written, help get them introduced, recruit allies in the legislature who actually care about the sound money issue to put in the bill, and then let people know in the grassroots about it and get them to take action. And I think that's why we're having some success.
Yeah, it's a great point there. I look at Senator Mooney's bills that he puts forward in Congress, and a lot of times he gets no help with it. He gets no sponsorship, and I gotta wonder, why is it so difficult for politicians to just say, you know what, maybe there should be some type of gold revaluation and let's back the dollar and get it stronger?
Well, going to the politicians at the federal level, so they love the current system because there's no accountability on the politicians. It used to be when gold was in the monetary system, you could not have outrageous deficit spending because it created this problem where people could come and get their gold if they thought you were devaluing the currency. So the politicians had to have balanced budgets. And the Federal Reserve couldn't just print money ad infinitum, which is what they do now. So the system actually works great for the politicians because they don't have to vote for tax increases, and they get to still spend a fortune, and they just shift that over to the Federal Reserve, which dutifully prints and monetizes the debt. And so that's why, since we went off the gold standard, you've seen the debt go up like a hockey stick. And I'll go this way, maybe that. But in 1971, when we went off the gold standard, the final link was broken. The debt exploded. It was well under $1 billion, I believe, and now it's $30 billion. And the value of the Federal Reserve note has fallen by probably 90% since 1970 or 71. So the politicians, again, they don't necessarily understand it, but they certainly don't mind being able to deficit spend. And if you add sound money back in, it's going to add some accountability to that, and they're going to have to make tougher choices. And so what they're able to do now is just put us in an untenable position and basically screw over every saver in the United States or anyone who holds Federal Reserve notes by giving them, negative real yielding money. And the people that are rewarded by that system are those that own assets who can hedge against that inflation, whether it be real estate, even stocks, and certainly gold and silver, which is a nice hedge. But the people that really get punished by this system are the ones that can afford it the least. It's the people that are on a fixed income. It's the people who are on a pension, savers and wage earners who don't own a house and don't have assets and are seeing the purchasing power of their money go down. And it's just it's a very immoral, unjust system. And it's a substantial challenge in front of us. I think things like Mooney's bills. I think that as things get worse, I think the environment to move those things forward improves. Unfortunately, that's how sometimes these things work. So, they're well written, they're introduced, there's some awareness of them. We haven't made a huge push at the federal level because we're having so much success at the state level, and frankly, we're a large precious metals dealer, and the Sound Money Project is significant, at least in terms of, compared to anyone else that's working on the issue. But, we have limited resources. We can't do everything. So we're really focused on the states right now. And at some point, things may happen where we turn most of our focus to the federal.
Okay, it's interesting that you brought up the people on fixed incomes, the savers. What happens if, let's say, the U.S. doesn't choose to back its currency by gold, and some other major country or major currency comes in and backs their currency by gold? What happens to all these people?
Well, I think that causes an acceleration of what we're seeing. If in terms of inflation, in terms of devaluation. So I think it could be, very, very destructive. Now, arguably, we might try to relink gold at some much, much higher, exchange rate before somebody else does in a crisis. As long as we can get away with what we're doing as a country with the Federal Reserve note, I think, there's likelihood that we might continue doing that. And if somebody preempts us, then maybe there's an issue, but I wouldn't be surprised if the U.S. ultimately tries to get in front of that at some point and address it before we completely lose everything in terms of the status of the dollar. But I think that will be further down the road in terms of inflation and turmoil in the world before that happens. But anything can happen, Patrick. I don't know. Anything can happen. I think that's why it's really just downright dangerous not to have some exposure to these assets, and so few people do on a personal level. So few states do. So countries still have gold, but individuals and states have very little. And I think that's something that needs to be addressed. And people are kind of waking up. It's still a very small number of people, but it's more than it was a year ago, and it's more than it was 2 years ago, and it's way more than it was 5 years ago. So I think that at least people are kind of getting it, and many are taking action to protect themselves from this situation. And, the more that happens, the better, and the sooner it happens, the better.
Amen. Stefan Gleason, before we wrap up, can you tell our viewers about how they can follow you and about how they can support the Sound Money Defense League?
Great. Appreciate that a lot. So Money Metals Exchange, go to moneymetals.com. Get on our email list. If you're in the U.S. in particular, if you get on the Money Metals email list, or if you go to soundmoneydefense.org and get on the email list from there, we will be able to alert you of legislative battles that are happening in your state. If we're involved in your state on a certain piece of legislation, I think we have bills in 12 states right now. So we're sending out alerts to people on our list. We have a large email list. So getting on the Sound Money Defense League list or the Money Metals Exchange list is a way to get access to that information, so we can alert you of ways that you can help. So go to moneymetals.com and just sign up for the email list.
Stefan Gleason, we thank you for your time. We appreciate what you're doing, and I hope we can really do this again soon.
Thank you.
That was Stefan Gleason sharing his views on the economy, geopolitics, and sound money. For more info on Stefan, please visit www.moneymetals.com and www.soundmoneydefense.org. If you like this video, please give it a thumbs up, subscribe, and share to let the algos know you want to see more content like this. Audio-only versions of this interview can be found on iTunes and Spotify.